Hello guys, welcome to the Solid as a Stock session. My name is Becky, my email address is down here, becky@traddictiv.com, and then you've also got support@traddictiv.com. Don't know why sometimes that happens with my arrows. There we go, better. Those are the two emails that you can use to get hold of us if you have any questions. Now let me just make sure that the disclaimers are up there on the top left hand side. Whilst they're on, I'm just also going to check that we've got all of the chat boxes open and I can see what questions you guys might have. Also, I know that I look weird lighting wise. It's very dark in the UK at this time, so it's not as natural lighting as it would be normally, so sorry if it looks a bit weird. Okay, so Solid as a Stock, we are looking at stock trading. Now just to sort of clarify what the agenda is. We will look at the current market environment and look at some new trading opportunities. We'll look at some closed trades and some open trades from trades that we've put on before, and I'll explain what happened with them. Did we make money? Did we lose money? Are we still in them? How would we manage them? In fact, we'll do that first before we go on to look at new opportunities. Now we are streaming in different places all at the same time. We're on a bunch of free platforms such as Facebook and LinkedIn and YouTube and things like that. We're also streaming inside our closed coaching community, let me just make sure that the chat box is open there. So we're streaming inside there as well. So people in our closed coaching community are paying a small monthly fee to have access to that closed coaching community. Gives them access to more of our time in a closed environment. So what we do is we run the same sessions, but about halfway through, usually after we've placed at least one trade, about halfway through the session, we will cut the stream to the free areas and we continue within the closed coaching community. So hopefully that makes sense. So what we'll do first, just before we get started, I just want to highlight, losing my mouse, here we are, just want to bring you to this link here, which is tradewithufos.com/Becky. From this link, you can do a variety of things. You can get apps or platforms if you want to directly from here. You can book one-on-one coaching with me if you'd like to. Most importantly though, you can come down here and once you have logged in to your free membership, you can post questions on this this page, which we can then answer questions on this page and everybody learns from this same area together. So ideally, if you have questions, if you're watching this recorded or thinking about it after the fact, by all means post a question here if you're happy to do so. If not, of course, you can email me. Okay, so let's go back now to look at some trades that we placed last time. We've got quite a few today that were open or closed from last time, or from sessions previous. So just to sort of make sure that we've gone through all of these and we can see what's going on. So first thing was MNR, that was the ticker symbol, and we were looking at as Monmouth Real Estate Investment Corporation. Now, for those of you that don't understand what you're looking at in terms of why we placed that trade, don't worry, we'll get into that in a minute. Just understand that the black line was our entry line, the red line was our stop loss, the green line was our first target, and we had our second target as a trailing stop, meaning we would have, if we'd have gone up, we would have trailed our stop behind UFOs to keep us in profit as we moved up. Now, unfortunately, very unfortunately with this trade, so just to sort of expand here, so we placed this trade on the 15th of October. We were triggered into the trade on the 19th of October. That's when we got in. It then went up and it hit our first target literally just on the 21st of October, because the target was 19.30 and we got up to 19.30. So literally just hit our target. That's 1-to-1 away. It then came back and stopped us out. If I just pull this up a little bit here. It then came back and it stopped us out at this line. Stopped us out on the 29th of October in the evening time. So we got stopped out of that trade, and as we can see, it then gapped up hugely right the way up here. So that would have been a, I can't do eyeball that, but an 8, 9, 10-to-1 that we would be up by now if we'd have not got stopped out there, which is really frustrating when that happens, really annoying. However, we'd much rather have these annoying things happen where we miss what would be really great trades than to not have stop losses and perhaps lose the entirety of our account overnight, or lose half of our account in one trade. we need to make sure risk is managed, and that might sometimes mean that we miss out on reward. But to shoot for reward without risk management is kind of like playing the lottery. It's kind of like gambling, right? You could lose it all, you could win it all. You know, it's not very consistent and structured way of applying yourself to the market. So unfortunately with this one, this was a break-even trade in the end. We made half, we lost half, break-even trade. Unfortunately missed out on this big move to the upside. We were essentially right on the direction, but just wrong when it came to that risk management piece. So shame there, but still break-even trade. We didn't lose, which is good. Let me just check again where we're at with questions. Again, by the way, if you're watching live, if you have questions, let me know as we go. I'll always stop whatever I'm doing to make sure that I am answering your questions and making sure that these sessions make the most sense to you guys that are watching. Right, so that was MRN. We also have, from the same session or from further back in time, we had a trade on X-ray, which is the ticker symbol. It's Dentsply Sirona Incorporated. That's the name of the company, but the ticker symbol from the stock was X-ray. Okay, so in this particular trade, this was a short position. I'm just going to squidge this up so we can see it. The black line was our entry. The red line was our stop, again going short. We had a green line here, that was our first target, and a green line here, which was our second target. Now we hit our second target yesterday afternoon. So overall, we took half of our position off here. We took the other half of our position off here, which was whatever to 1. I can't eyeball that. Maybe 10, 12, 13 to 1, don't know. So averaged out somewhere in between is where we would have made that profit. We would have ridden this trade from the entry on the 24th of September right the way down to getting out on the 11th of November, profiting on the downside to the short position here with X-ray. So there's that one, a completed trade there. Nice big profit on that one. Then we have MWA. Got my list over there, that's why I keep looking at it. MWA, as we can see with this one, depending on how often we're looking at it, and we hopefully should have looked at it between the 15th of October and now, this one was a trade that had we just left it, it would have been a loss, and actually would have gapped over our stop and we would have lost a bit more than what we wanted to. However, we probably would have cancelled this trade because we placed it on the 15th of October and it went away. And the EMA therefore moved away. If the EMA is moving away from our entry, it gets further and further away from the trading situation that we need it to be in the trade. So probably around about the end of October, yeah, the end of October, we would have cancelled this trade, meaning we wouldn't be in it. We didn't win, we didn't lose, we didn't break even, nothing happened, we cancelled the trade. That was MWA, should have been a cancelled trade. With PEB, oh, maybe we already did that one last time, don't worry. So DLR, there you go, DLR, Digital Realty Trust. This one was a loss, just stopped us out here at the bottom. So it was placed on the 29th of October. I'm just going to spread this out. Triggered on the 11th of November, but the EMA from the bigger time frame would still be there. So everything would have still lined up for us to have taken this trade, and unfortunately this meant that it was a loss in this case. So we would have lost, in the example I use, it would be $100, but it could have been $1, $2, $10. Ideally around about 1% of our accounts that would have been lost on this trade. So a loss on this one, we got a profit, a big profit somewhere else, a break even somewhere else, and a cancel trade somewhere else. So an example of each of the 4 things really that could happen in a trade. Now looking at the next one, which is Home B, Home Bank Shares. This one, we cancelled this one. So this placed on the 29th of October, so around about this time. It's obviously shot off, and as we were just talking about with MWA, it's gone way too far. The EMA is now way out of where it should be, so we cancel the trade. So no trade, no trades pending anymore for home B. Now with this one's meow, methane, but meow is funner to say. More fun. My grammar's really bad today, sorry. More fun to say. So with this one, we are probably cancelling this trade. Oh no, wait, we're in this trade. We are in this trade, apologies. So we placed this trade on the 29th of October when the EMA was just inside. It triggered on the 29th of October when the EMA was just inside, so we would be in this trade. So far, hit our safety target. Nothing more to be doing on this. We've hit our safety target. It can now either go towards our final target and profit for us totally, or it can move against us, hit our stop, and we would break even. So that's the situation that we're in here with Mio. Okay, next one is PBA. There's only 2 more to go, but we've got a lot of outstanding trades here. So let's have a look at PBA. So PBA, we triggered into this trade as well. We placed it on the 29th of October and it triggered on the 29th of October. So again, whilst the EMA, if I bring this down, are we on the 3-day chart as well, just to make sure we're looking at the same thing? Great. Okay, so I think our, oh no, we do have a 39.05 apparently was our second target on this one. Just double checking. I'm just going to draw that in so we can see where our second target was. So it's 39.05. That's what I've got here on my notes. So with this one, we placed it on the 29th of October. We got in on the 29th of October. We are so far still in the trade, not yet hit our safety target, but still in the trade. No reason to cancel it right now. Everything's still looking good for our long position here. So we're in this trade now. It's open, so we'll see in time to come what happens with this. VG, Vonage Holdings, here we are. We are in this trade as well, placed it on the 29th of October and got triggered around about then as well, 29th of October. We've hit our safety target so far and we would be on our way to a profit. We have a trailing stop for our target too, which means what we're going to do is take our stop loss and put it behind new UFOs. Now for the time being, kind of might as well keep it where it is because we've got UFOs sort of overlapping each other within our original entry zone anyway. You could move your stop up by, yeah, a couple of cents, but you might as well just leave it where it is. So we are in a couple of trades. We have cancelled a couple of trades. We have profited very well on one of them. We've lost one of them. We've broken even on another one, and we've cancelled another one. So all of the examples that could be trade management and post trades have been covered. So hopefully that makes sense. Now, let's now get to the fun bit and look for new opportunities. Again, I'm just keeping an eye on the chat box. If you see me looking around, that's what I'm doing. Keeping an eye on the chat box and seeing where we're at, if we have any questions or anything. Okay, so what we're going to do first and foremost, we're going to come to fxstreet.com. We're looking at their economic calendar to see what news could be coming out in the next week or so that could impact our trades. Now we're looking for the next week or so because we're sort of longer term swing trading. So if we had news coming out that could really impact the markets today, Monday, Tuesday, you know, we might just be a little bit careful as to the amount of risk that we place or how many trades that we place. So for us, we've already had news that came out today on the US dollar, which was in theory, or not just the US dollar, sorry, US markets, that in theory was, well, was worse than what was expected. Today, nothing more after this morning, so that's already done. With next week, we have some news coming out as the markets open on US markets on Tuesday, the 16th of November. So again, we might see a bit of volatility on that day. So it might be that if we place trades today, you might want to check in the morning of Tuesday, November the 16th, and perhaps cancel those trades and get back into them after the news has had its effect. You might just keep it on and see what happens, or you might just wait until Wednesday perhaps, or later on Tuesday to place the trades. To be honest, for me, you know, we tend to make sure we're using bigger timeframes anyway, so news doesn't affect us as much as if we were using smaller timeframes, but it depends on your risk tolerance and who you are as a trader. So then what we're going to do, we're going to come to top, our tradictive options planner, and this is what we're going to use to start finding some opportunities. Now, first thing we want to do is figure out what the market as a whole is doing. The reason why we want to know what the market as a whole is doing, which at the moment, by the way, on a weekly chart, which is what we're going to use for our bigger time frame, on a weekly chart, we've got probability upwards. That's what that's telling us there on our auto climate. Thick blue dot tells us probability upwards. Now we have probability upwards on the markets as a whole, which means we want to really be looking for individual stocks that have probability upwards as well. Reason for that is because we've got that correlation. The market as a whole is going up, and if we pick an individual stock that's part of that market as a whole, it's being brought up by the sector perhaps, or by the market as a whole, gives us correlation. By the way, that doesn't mean that we want to only take stocks to the upside. We can take short positions too. It just loses that 1 point, doesn't it? It's not doesn't have correlation in its favor. But as long as it has everything else in its favor, doesn't matter so much. But I like to at least start when we know we've also got correlation on our side. Now again, just checking in for questions. Brilliant. Okay, cool. So what we'll do is we will bring up our matrix. We're looking at all stock symbols, stocks and ETFs on all US exchanges. Minimum price of $5. Sorry, I've got something in my throat. Hold on. Oh, that was weird. Okay, sorry. So we are looking at stocks that have a minimum price of $5. The reason for that is we want to avoid penny shares, really, if we can. Only because there tends to be less institutional interest in penny shares, which means there's less predictability. And we want to make sure we have more predictability because that gives us more probability, which helps our trading. So minimum price of $5. What we're then going to do, in this case, we're just going to go to auto climate, and we're going to say we want the weekly, let's untick these, to be confirmed up, sensible, and at the 9 EMA, or near the 9 EMA. And we're going to click scan and see what we have. Brilliant, we have a big list here. So what I'm going to do, just to filter this down, I'm going to go to the earnings tab, and I'm going to say I want to exclude stocks that have earnings coming out in the next 5 days, because earnings on stocks can increase volatility. So let's give ourselves a smaller list where stocks would have less volatility. We still have a big list. So what I'm going to do, I'm going to put the minimum price up to $15. I'm going to put the maximum price to, let's say, $300, just because then we're not looking at stocks that are thousands of dollars a share, so it's more accessible for most people. Still got a big list, so perhaps let's put that to $200. Didn't really make a difference there, did it? What we can do as well is we can perhaps increase this to $20. Okay, what we'll do, we'll go through this one by one. We've got a big enough list here, and hopefully we'll find something from this. Now, I might not go through all of them, of course, because we might find opportunities, obviously, right at the top. I've filtered it by the symbol, only because I don't want to be, if we filter it by last or something like that, they can move. So it just keeps it easier for me to go through it one by one. And what we'll do, and to request from somebody that joined our session last time, we're going to look at also cycling through different time frames to find perhaps different opportunities. So I'm going to first explain, for those where this might be the first stock session you've ever watched, maybe the first session of Trade with UFOs you've ever watched. I'm just going to first very quickly summarize our methodology. First things first, we want to know when we're looking at a stock, where does the probability lie? We use AutoClimate to do that. That's a free app on most platforms you can get it on. And what AutoClimate does is it shows us these dots. They're either thick blue, thick red, or thin, of either colour. The thick blue ones tell us probability is up. The thick red ones tell us probability is down. And the thin ones of either colour tells us probability is neither way. So that then helps us to figure out, should we buy or sell or do nothing. Then let's say, so in this case, we want to figure out where we're going to buy. Well, if we're going to buy, we want to buy where we have higher probability, can manage our risk and increase our reward. And we do that by using another app called AutoUFOs that show us where buyers and sellers are. Where are big stacks of buyers, where are big stacks of sellers? If we're going to be buying, which is what the AutoClimate tells us, then on our smaller time frame on the right hand side, we want to find big stacks of buyers so we can buy with them. And it even tells us the prices, between which prices we have these buyers. By buying with buyers, we increase our chance that price goes up from them. Now, a third element that we use is to also make sure that the EMA value, which in this case I know that price is just over it here, is 20.34, that the EMA value that we see on the left hand side coincides with the UFO we see on the right hand side. So in this case, if the EMA value is 20.34, then the EMA value is here. So it doesn't coincide with the UFO. So in this case, we wouldn't have a trade. The reason we want it to coincide is because people buy and sell at the EMA value. And so if probability is up, if price is above the EMA, and if we have buyers here, let's assume, just for the sake of argument, that the EMA was enveloped by this UFO, that they coincided at the same place. Then what we'd have is buyers plus buyers in a situation where we have probability to the upside. So we have probability up, and probability up all at the same area. That's ideally what we're looking for. Now on this time frame, we don't see this. For us, we use the weekly on the left-hand side, and normally what that means is we use the 144-minute on the right-hand side. We do that because it's a Fibonacci number. It tends to give us slightly better probabilities than sort of standard or common timeframes that you could be using, but doesn't always make that difference and doesn't always make a big difference either. Now, I talked last time, in fact, I think I talked about it in a sharpening session, about where you might be able to cycle through timeframes on the right-hand side to help find a trading opportunity. And that's what I'm going to do today. Now, for those of you at the start of your journey, I would say don't cycle through timeframes. Stick to one on the left and one on the right, and they're coupled together. It's weekly, then it's 144. If it's daily, then it's 55. If it's monthly, then it's 377. Whatever it is, you stick to that because it might be too confusing to cycle through timeframes. Those that are a bit more advanced, we understand that what the right-hand side does is allow us to take advantage of the climate, allows us to take advantage of that move to the upside or that probability to the upside by getting in with buyers in a smaller range. That's why we have a smaller time frame on the right hand side. We can buy with buyers in a smaller range, giving us a reduced risk and therefore a greater reward to risk ratio. That's why we do that. So it doesn't have to be a specific time frame. It just needs to be smaller than the one on the left. And it just needs to be perhaps within a range. You don't want to be getting in on 5-minute charts trying to take advantage of a weekly climate. We want to stick around similar kind of timeframes to what we have here. So what we're going to do here, we're going to look at the daily chart. And all we're doing in each case, and what I'll do is I'll just draw a trend line that will be round about where the EMA is, so 20.34. And we're just going to look at different time frames that are around about the same, close to each other, and see if we have any UFOs by them. Now I've looked at the 144, the 1 day, the 2 day and the 3 day. I'm just flicking through them now, and you'll see they look very similar, but we don't have any UFOs that coincide, so no trade. So now I've described this, I'm going to now go through it quickly, clicking through one by one, seeing what we do, clicking through the time frames if we need to see what we have. At the moment with this one, this is ACGL. We have a thick blue dot, probability to the upside. We want UFOs on the right hand side. We don't have any. So basically we want UFOs very, very close to current price because that's where the EMA value is. And we don't in this case, so no worries. We come back and we click on the next one. And that's what we'll do. We'll just filter through and see what we're looking at. See if we have things that line up. Again, we're looking for UFOs that are very close to current price. Let's have a look at what. So the EMA is 26.35. So too far away really on this one, I'd say. Yeah, unfortunately, it didn't work out on that one. Only just, but didn't work out. AMC. Again, it's very close to current price, isn't it? 39.28. So again, it's not lining up there, nor there, nor there, nor there. No problem. Next one. And that's all we're doing. By looking at different time frames, we give ourselves more opportunity, essentially. So this is 46.17. So again, very close to current price that we're looking for. Okay, nothing there. And again, all I'm doing is I'm quickly looking and going, right, probability's up. Where's the EMA? It's 20.85, which is actually just below us, literally just. And then I'm cycling through time frames. I'm looking at the 144, the 1 day, 2 day, and 3 day, to see if we have any UFOs, green UFOs, where the EMA price is. So far, we haven't found an opportunity here. But for those of us that follow normally, you'll know that if we have just the one time frame on the right hand side, it can be hard to find one where everything lines up. And that's okay, because we'd rather have less opportunity and greater probability. But by doing it this way, we can kind of combine the two. So 93.47, again, very, very close to current price. And nothing lines up on this one either. I'd like to think from this big list that we have that we will find something that works. So let's come to this one, CVBF, 20.25. Great, so I'm just going to draw a line here because it's slightly further away from current price, so it can just keep me, keep my eye on the prize, as it were. 2 day, 3 day, okay, nothing there either. EH. Very, very close to current price. The EMA price is 24.81. So let's see here. Nothing there either. Come on, we've got to have, out of this big list, we're going to have to have something. If not, we'll have to widen the list, I guess, or look at just random stocks that we think of. 23.90. So let's see. Oh, wrong one. Whoops. Let's put that back to weekly and click on here. So we want 23.90. That's where we want the UFOs to be. Again, nothing there. No worries. We will get there, I promise. Well, I can't promise, but I'm sure, statistically speaking, out of this big, huge list, we're going to find something that adds up. So 28.52. Which is, again, very, very close to current price. Nope, nothing there. Maybe the markets are toying with me today. They want me to click through and it'll be the last one on the list. I'll go through 20 odd before I find anything. So 20.99. This looks more like it. So let's just put that here. So 20.99. So I would say we actually have an opportunity here. That's because price is a little far away. As price moves down, so too will the EMA, because it's a moving average. That's what the EMA is. So as price moves down, so let's say price comes down like this, our EMA is likely to move down as well, meaning the EMA and price are likely to reach each other at the same place. So we have opportunity there, but let's see if we can find better opportunity. Okay, so now I've gone to the daily. You'll notice we actually have 2 UFOs that combine with each other that are closer to current price as well. Give us a wider area that we could be getting into this trade. So I like that on the daily. Let's look at the 2 day and the 3 day. Okay, so the potential problem that we have with the daily is, you see this number up here. Those of you that watched my sharpening session last week will know what I mean here. That number is 47.87. Call it 47. 47% of UFOs work. And work is defined by moving between each other. But essentially, that's our probability rating. 47% on the daily. Now, it looks good in terms of having 2 UFOs that overlap, a bit more room to get into this trade. But on the 144, yes, we're only going with this bottom UFO here, but it's got 59%. That's 12% extra probability rating on this time frame. So for me, I'd rather use this time frame, even though it might mean that price comes in, hits this UFO and goes off, and we miss the trade. I'm sort of sacrificing, perhaps missing a trade for greater probability, and that's what I want in this one down here. So let's put this on. In fact, do you know what? And I know this might be annoying for those of you that are watching. What I might do, because this one is relatively far from price, I might just make a note of it and come back to it if we don't find another trade. So let's go back to our list, find another trade that might be quicker to get into, and see if we have any other opportunities, knowing that we can come back to that stock if we need to. So we basically want a UFO that is at current price. On this one, nothing there. I'm going to go through this super quick. HSBC, 28.75. Nothing there, and also really low probabilities with HSBC as well, interestingly. IRDM. Okay, so we're looking at 41.31. Okay. Nothing there. Sometimes we look at trades and we see them immediately and it goes, oh yeah, that makes sense, that we're getting in straight away. And sometimes, unfortunately, like today, we have situations where we have to look through many different opportunities before we find something. Right, this one's better. That says 0, but I think it's because it's loading. So let's just give it a second to load and give us a better number there. There you go. Oh, 49.50. So this is KRG, Kite Realty Group. We have thick blue dot, probability upwards. We have our EMA at 21.27, which is here, nice snugly within this UFO. We also have this UFO underneath, and because of the proximity of the prices, we'll probably combine these two. So even as price falls, and so too does the EMA, which at the moment it's here, it's still likely to fall within at least one of these two UFOs. So we're going to pick this one. Now, the reason I went, oh, is because Jose's rule is 50%. That number needs to be 50%. My personal rule is 40%. I try to show examples that are 50%, just because it, obviously the higher the probability, the better. I'm going to take this one because it fits what my rules would be, and it fits everything else. So we are going to write this down and we are going to place this trade. So sorry it took a little longer today than it would normally, but hey, sometimes that happens in the markets. So it's KRG, it's long. Our entry is going to be 21.37. That's what this UFO is giving us. Our stop loss is going to be 20.78. So see that number there is 20.88. That's the bottom of this UFO. I'm going to take away 10 cents, give it a little bit of wiggle room. We'll figure out our first target in a minute. Our second target is going to be 25.79, because that's the closest stack of sellers on the bigger time frame. And in this case, we're actually using what would be the normal time frame we'd use anyway. So let's come to TradingView to place this. I always like to use TradingView to place trades. It also gives us different platforms to be looking at. And I find TradingView really user-friendly with the maths side of things, because I'm not the best at maths. So let me just connect to paper trading. There we go. Okay, brilliant. Great. So let's go to the 144. It might give us the same prices. Sometimes the prices that are given to us are the same, sometimes they're not. In this case, they're actually not. We'll go by the top ones. So our entry is 21.37. Our stop loss was 20.78. Okay, so that was our trades that we had here. Now I'm just going to look, Kite Realty Group 144. Just going to double check. Kite Realty Group 144. Okay. All right, no problem. That's what we're looking at. So that's what we'll do. We're using top data, so we're trying to be consistent here, assuming that you are using TradeStation data, which is the same as top data. It's coming from the same place. Then it doesn't actually matter. In fact, we'll take off UFOs here. It doesn't matter what TradingView is showing us, because assuming that you would be linking TradingView to your TradeStation account anyway. So we will place this trade. Let's put our second target in just as a visual. So it's 25.79. And then we'll figure out our first target as we place this trade. Okay, so we're going to click buy. We'll type in our entry, 21.37. Our stop loss is 20.78. Our risk, I always do a total risk of $100 for example's sake, for demonstration's sake, just because it's easy to split $100 into two. $50 on one trade, $50 on the other. Obviously, you guys decide what risk makes more sense for you. Our first target is always 1-to-1 away, so that's 21.96. So it's our safety target. It's a target that would be break even if we were to hit it and then get stopped out. And then we'll place that trade. So 21.96. Okay, brilliant. And our second target, so 21.37, that's our entry. 20.78 is the stop. $50 worth of risk. Our profit target is going to be 25.79, which is 7.5 to 1 away. So if we're right on both of these, then we'll average out somewhere in the middle at about 3-4 to 1. Okay, so let's make a little note. So this was placed 12th of November? Yeah, placed 12th of November in the live session, so the one that's going to everybody. Nothing out of the ordinary with this, so don't need to make any other notes. Save that. There we go. Now, I know it took a little while longer than it might do normally, where we're placing trades. Normally, hopefully, we find on this list trades that come to us. Trades that come to us quicker. We had to go through a big old list before we got there, but we did get there. We found a trade that fit our criteria. On top, we used that data. We then went and placed that on TradingView. So this was KRG, which is Kite Realty Group. We're using these two UFOs combined together that we see on top, because we have a thick blue dot on the weekly. That tells us probability to the upside on the weekly. We want to take advantage of that. We take advantage of that by coming to a small time frame, using smaller areas to get in at, so that we can get in closer to current price, be able to ride that wave, keep our risk tighter, and we want those UFOs to coincide with the EMA, which they do. So that's the trade that we placed. That's what we'll catch up on next time. I'm now going to cut the stream to the free versions, and I'm going to stay in the closed coaching. We'll look at some more trade opportunities in the closed coaching. For those that have been joining us on the free platforms, please go to tradewithufos.com/Becky. If you have any questions, you can then sign in here, ask your questions in a public area so that I can answer them in a public area and we all learn from this space. You've also got one-on-one coaching that you can book with me here, and different apps and platforms that you can use as well. Any questions that you might feel uncomfortable to ask publicly, by all means, please email me, becky@traddictiv.com, or there's support@traddictiv.com. So for those of you joining me on the free platforms, I'm going to love you and leave you. I will see you guys some point next week in the sessions that we do there. Any questions, reach out. Have a great weekend and a great end to your trading week. Those in the closed coaching, please stay there and I will be with you in a minute. Take care, guys. Bye-bye.